Hi everybody, this is Osprey from MyChartCoach.com. In this video we're going to take a look at natural gas and oil. As you can see here in futures trading tonight, the market is under pressure. We've got the indexes down with volatility rising, and then oil is under a little pressure tonight as well. You can see it's down 21 cents here, and then you've got natural gas is actually doing well. It's up over 3.5% here in futures trading. So let's take a look here at the investing.com natural gas futures streaming chart. Yeah, this is a cool tool. This is a free chart, so I highly recommend using this if you're trading commodities. Yeah, and as you can see here, it closed Friday right here on this red candle in this tight trading range, and there was a gap up open today, so it's pushing higher. So we're going to see if natural gas can come up here and break these resistance levels from back here. It's going to be this whole 465 all the way up here to the 470. So between 465 and 470 is going to be a crucial zone for natural gas to get through. If you look here at natural gas ticker symbol UNG, you could see it had an interesting week last week. You know, just lots of volatility here. You know, it started with a big gap down open on Monday, and then it had a big gap up open on Tuesday with the black candle, which is a red flag, and then it had the gap down open on Thursday, and then Friday it finished with this nice white candle. And so if you see here, there's this symmetrical triangle pattern with descending resistance and ascending support, and the close on Thursday was right at that ascending support line. You know, it broke below, signaling that it could drop lower. If this was a red candle and the middle Bollinger Band here at 35 support level broke, that was going to signal downside risk for natural gas. Okay, so now you could see where this candle on Friday is wedged in between descending resistance and ascending support. That signals that this pattern is going to break and a new pattern is going to emerge. Tonight, it's signaling that it wants to break out higher with that move in futures trading. And so it's looking like it wants to break above the descending resistance line. So what you want to see is it trading above 37 tomorrow, and then getting above the two high closes right here. This 37 and then the 37.75. Okay, you know, right in between 37.50 and 38. This closing price right here on the 28th is going to be the big level to break. If it can break above that level, it could come up here and retest the highs from the 14th, which is up there, you know, near 39.50. And so if we look here at UNG on the weekly chart, you can see the weekly chart, the jar has been filled back to these 2016 levels, and you can see it's been hitting this resistance zone from 2016 and failing to break. And so what you want to see is a break above this, you know, 37.75 level. It's all about you know, breaking above this red line here. That was the high close from 2016. Also, it would be bullish if it closed above the high close from 2 weeks ago. And so if it starts trading at 37, you know, 75 above 38, if it gets a weekly close in that zone, that should signal that it wants to push higher. And yeah, we'll have to see here. It's got a very strong chart here on the weekly chart. A drop below EMA 4 at 35.48, that would signal that it's cooling down. Okay, let's look at UNG on the 15-minute chart. You can see here it had this nice rally into the close. Yeah, getting above 36.80 would be bullish, and then it's going to be all about this 37.50 zone. You can see over here it was the high close, and so if it can push above 37.50, it could head higher. It could find some resistance in this zone, so it's going to have to break to head higher. Yeah, and then it closed holding that middle Bollinger Band. You know, all the moving averages are all converged down here. You know, as long as it's staying above 36, that is bullish for UNG. If you look at UGAZ here, ticker symbol UGAZ, this is the 3 times long natural gas. You could see it's got this another triangle pattern with the ascending support. You know, you either have descending resistance or horizontal resistance, however you want to look at it. But you can see all these closes are within this range. So it's really been in a sideways type of channel with lots of gap ups and gap downs. And so right now it's all about holding that middle Bollinger Band at 152.55 and then breaking above this this resistance zone, the closing price here on the 28th. If it can get above this level, it looks like around 172 or something, 173, then it could possibly break out higher and head back up into the 200s. If it came down here and dropped below that 150 level and then broke below that 140 zone, that's going to signal downside risk. You could see 130 tested. Right now, it's looking like it wants to push to the upside. Okay, let's look at DGAZ, ticker symbol DGAZ. Yeah, as you can see here, it has more of a descending triangle type of pattern. You have descending resistance and horizontal support. And what you don't want to see if you're a bull is a break below the closing price on the 28th. If it breaks below that level, if the close below, it's going to signal that natural gas is heading lower. You know, it tried to get something going multiple times here, and DGAZ did. It keeps trying to, or this is going to signal that DGAZ is heading lower. This is the bear, the 3 times bear natural gas. And so yeah, each time it forms this black candle on a gap up open, you know, it's sold off. You know, and so it's been a tough trade for people to get this going. Natural gas just seems like it wants to keep pushing higher. What it needs to do is get above 57. Okay, if DGAZ starts trading above 57 and closes above the EMA 8, that line, that should be the signal that it's finally ready to start pushing higher. As long as candles are riding below EMAs 4 and 8, it's going to signal that natural gas still has more upside potential. Okay, for the DGAZ bounce play to work, it has to break above 57 and turn EMA 8 on the daily chart into support. Okay, let's look at crude oil futures. This is the streaming chart from investing.com, and then you can see here it closed on Friday down here. Yeah, let's get rid of this thing. Yeah, it closed on Friday down here. It was an interesting day. You know, it ran real hard into the news of the OPEC meeting, and then they came out with the numbers. It just went sideways, and then they sold it off, and it came all the way back down. So that was a pretty crazy day. Right now, you want to see this level hold, this 52.14. That was the closing price there on Friday. If it drops below that level, it could come back down here and test the close here at 51.84. You know, the resistance level at 51.84. You know, if it needs to hold this support zone and then break back above the 52.50, 52.60 level, and that would be a signal that it wants to, you know, try to get a bounce going, try to get pushing higher again. It's going to be a red flag if it starts breaking down and trading below 52. Okay, if we look at USO here, this is the United States Oil Fund. You could see it's been trying to get a bounce going. You know, the black candle was a red flag. It had the gap up open and then it pulled back. You know, that signal that people were locking in gains, and then now it's trading lower in futures trading. You could see here there's a gap between Thursday and Friday, and so yeah, it could come down there. Basically, it's going to be about holding 11 for USO. If it drops below 11, you know, it's likely, or there is a chance it could come down here and test this the close on the 28th. Okay, which is, you know, right here around 1060 or so. And so you don't want to see, basically, you know, it had been trying to bounce and it's above EMAs 4 and 8 at 1106 and 1109. And so if it starts trading below 1106, that's going to be a red flag that the bears are back in control. They already look like they're in control with the black candle and the big bearish pullback. As you can see, it failed to get above EMA 13, the orange line at 1127. It's going to have to turn that level into support. It has been the sell zone. Okay, so trading below 11 could see a drop back down to 1050. Okay, let's look at USO on the 15-minute chart. You could see here on the 7th, you know, it had the gap up open. You know, the news came out, and then, you know, they ended up selling the news. And so basically what you want to see, here's that 11 level again. It's going to be all about holding these moving averages. And so you're going to want to see it stay above the 200 simple moving average at 1099. If it drops below that level, it could come back down here and test these, test the low close from the 6th and the low close from the 3rd, you know, which is down here by 1065 and down here by 1055. So it's going to be a major red flag if USO fails to stay above 11 on Monday. Okay, let's look at UWT. This is the 3 times long crude oil, and yeah, you could see it was trying to heat up. It formed the black candle as well. You know, it has the micro gap here. Basically, you know, for these types of dead cat bounce plays, you know, EMA 4 is the key level to hold at 1451. If it drops drops back below that level, that's going to signal downside risk again, which it looks like it's breaking in after-hours trading here for, with oil down. If that continues into the stock market session tomorrow, you could see UWT break below EMA 4 at 1451 and come down here and test that closing price on the 28th. Once again, to the upside, it has to break above 1588. Fail to break above 1588, that signals the temporary top. So above 1588 signals upside potential, and then below 1451 signals downside risk. Could come back down here into the 13s. All right, 12s and 13s. Okay, let's look at USOU. This is the United States 3 times oil fund. Doesn't have the volume of UWT, but yeah, some people still trade these vehicles. And yeah, same type of setup. Notice the black candle. And so what it has to do is hold EMA 4 at 2653. If that level breaks, that pink line, you could see it once again come down here and test that closing price on the 28th. That's what it seems like it wants to do. It seems like the futures trading that it wants to come back down here and retest that November low close. Closing below the November low close would signal more downside risk. Okay, let's look at DWT. This is the 3 times inverse oil ETN, and so this is the when oil goes down, this goes up, and you can see it form the hollow red candle on Friday. That signals that even though it was down on the day, it traded above the open. It closed near high of day. What happened was it came down here and it hit the blue line. That's the 300-day simple moving average, and people did load off of that level at 1102, and then it closed back above the middle Bollinger Band at 1175. As long as this purple line is holding, this dotted purple line, it signals the uptrend is intact. There is an unfilled gap above. What it needs to do to head higher, it has to get back above EMAs 4 and 8, and so getting above that lime line at 1251, that should signal that it wants to head higher. If it drops below 1175, that would be a red flag, and definitely would signal downside risk if it dropped below 11. Okay, let's look at USOD. This is the United States 3 times short oil fund. Once again, crazy anemic volume, but I'll show you this chart anyways real quick. Same setup, bounced off of that 300-day simple moving average at 884. Back above the middle Bollinger Band at 927. Those levels need to hold. If it were to drop below, that's going to signal downside risk. As long as they're holding, this uptrend is intact. And then what you're looking for is a break above $10. That's the top of the gap between these two candles. If it starts trading above 10, that would be really bullish. All right, thanks a lot for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. Looks like, yeah, and I recommend checking out the SPY video that I put out today, the S&P 500 and the SPY, because yeah, it's breaking support. As you can see there was a triple bottom that was trying to form, and it broke below. What that does is that if let's say that happens tomorrow, and it does, a red candle does form and it closes below that low close from Friday, that's going to signal that the triple top has been confirmed, and it signals more downside risk for the market. Okay, thanks for viewing this video.